Welcome to another How To with Mia and Ziad. If you've been liking the content that we've been putting out, make sure that you're hitting that subscribe button, liking this video, and following us on our other social platforms such as Instagram, Facebook, LinkedIn, Twitter, TikTok, all the above. So the elections are tomorrow, and we're recording this ahead of time. So we're especially uncertain, but, we're overall very uncertain of what's going to happen with mail-in ballots. Will they be counted and validated? We have no idea who's going to win, but we do want to talk about investing during and after the election. We don't have a crystal ball. Our CEO actually does have a crystal ball in his office, but we don't have a crystal ball. And nothing that we say should be taken as advice. Please talk to your financial advisor if you have questions about your specific situation. But let's talk about elections.
Yeah, episode 15. I'm so excited for this. This is an important one. A lot of people have obviously had their eyes towards November 3rd, Election Day. And so I just wanted to talk over the investment side of things and how to best plan for investing around this election period.
Definitely. And so I put out a TikTok the other day that was kind of about, the volatile market and what's been going on. I think it was just a day where everything was red. So I posted this TikTok and my friend responded and he was like, what's going to happen, Mia? Is the market about to crash? Do I pull out everything now? And I think this is kind of how a lot of people are feeling. It's a very uncertain time to be investing. And, my response to him was mainly some takeaways that I had from our previous webinar with John Emerson, who's the chairman of Capital Group and the former U.S. ambassador under the Obama administration. But the market's super volatile right now, and most stocks are overvalued, and it would be healthy and normal to dip a little after the elections, but with a couple exceptions. At the end of a president's terms, markets are usually higher. And you don't want to be super reactive and selling off. You want to have your investments you want to hold them for the long term.
Yeah, exactly. A great example of this is back in 2008 when Obama took his presidency or his first term in office. The market took a major dip the first 4 months when he was in office. And so if you sold around the election, you felt like a genius for those first 4 months, right? But then afterwards, for the following 7-8 years, right, the market shot up. And of course, if you miss out on those losses, you can get back in, but it's really tough to find that right time to get back in. And market timing really isn't a long-term investment strategy. You want to be investing in companies that you think are going to be doing well in the long term anyway. So these short-term moments of volatility shouldn't be affecting you in the first at all anyways.
Yeah, those short-term volatility is normal. And that's kind of why we don't want to structure our portfolio for a Biden win or for a Trump win. And time again, we reiterate this. The most important part with thinking about the long term is you have to stay invested. Obviously each candidate has their agendas and that they want to pursue. But, as with most big changes, these take time. And you don't only stay invested, but you want to make sure that you are properly diversified as well.
Yeah, a lot of people will ask, well, what sectors do well in election times? And it really just depends. It's never, you can't ever point to one area doing extremely well during a period of, during when we have these election periods. Different, like Mia said, different presidents bring different policies and have different views on certain areas and industries. And so things are always changing. So when you diversify, you're able to make sure that you're exposed to all these different areas so that you're not missing out, as well as you're not realizing too much loss either. This year, obviously, the healthcare sector and the health sector in general has been a big focus, larger than normal, just as a natural response to the pandemic that we're currently experiencing. But again, really don't know. And so you don't want to try and take any big guesses and big bets in one area. Make sure you're staying diversified. Like we're saying, we don't want to structure our portfolio for one side winning over the other, but it's important to understand what are the expectations if either side wins, right? And so, Mia, if you want to dive into a Trump presidency or continued Trump presidency?
Sure. I'll start out with Trump. Markets don't like uncertainty. And while Trump's negotiation style has been pretty unpredictable at times, his commitment to lower taxes and deregulation may provide a consistent market friendly policy environment. And support for energy companies and specifically fossil fuels has been one of his focuses. It appears to be an ongoing objective for him, and he's pledged to continue the deregulatory agenda for energy independence under the aim of creating more jobs. And most companies in this sector, excluding renewable energy, will likely benefit. Versus Biden has been talking about phasing out fracking and in the debates reference investing in charging stations on highways to support EVs. But I think that you will dive into a little bit more about Biden.
Yeah, definitely. I mean, with Biden, a lot of what he's been supporting is, while he's taken a bit more of a moderate view compared to, a lot of his Democratic constituents, he's still already has multiple statements supporting an expansion of the Affordable Care Act, which definitely implies some significant infrastructural spending in the healthcare industry. Beyond that, there's obviously been this huge push towards legalizing marijuana. It's been a strong Democratic theme over the past decade. And so with Biden presidency, we're going to be expecting him to try and push for that as well. And then also, whether we like it or not, the world has been getting warmer exponentially over the years, and we see the push to sustainable energy being imminent. And with Biden in office, we would expect that to be more of a focus as well. We've already seen the effects of this push towards renewable energy through these past couple of years. You had oil this year had one of the worst years in the history of the market. While you compare that to companies like Tesla, who's shot up in value and has been pushed to the forefront of the automobile conversation, or NextEra Energy, a renewable energy provider who's become the largest electrical supplier in the country by in terms of market capitalization. And so, those kind of shifts are what we're expecting with the Biden presidency. Obviously, with all of this, this costs money, right? And so we are also expecting, if Biden does take presidency and he does have a favorable Congress as well in his hand, most likely going to see higher taxes as well to be able to support this kind of infrastructural spending.
Most definitely. And either way, markets will continue to be volatile. Historically, markets have seen more fluctuation in election years, and this year is definitely no exception, especially with the added factor of increased voting by mail. We will likely not have a final result until the end of November. And this creates, a lot more uncertainty, and uncertainty leads to more volatility. And it's hard to go through volatility alone. So definitely reach out to your financial advisor. And if you don't have one, talk to us. Make sure that the way that your portfolio is set up and that your allocations, make sure that they're aligned with your goals. And Ziad actually just released a whole video on volatility. So I'm maybe going to let him do a little brief breakdown and, give us a little bit of advice of what to do in times that the markets are very volatile.
Yeah, I mean, obviously, most people understand that when you invest, you're investing for the long term, but it's easier said than done, right? When you have these periods of volatility, you're seeing the market fluctuate a lot. You're seeing sometimes your investments go down significantly in value. So a few things that you can do to make sure that you are, managing through these times emotionally, let alone financially, is one, include some bonds in your portfolio, depending on your goals, right? If you're investing for a goal that's, not too far away, you don't want to be risking 100% of your investments in the stock market. Stock market's much more risky, right? Because you have that fluctuation. And so those bonds allow you to minimize that fluctuation while still getting your money growing for you. And then another big thing, and one thing that I remind all of my clients, is to maintain perspective on what this money is intended for, right? Understand what your goals are and why you're investing in the first place. And if this isn't money that you need within the next year or two, then you shouldn't be worrying at all. Volatility is a natural part of the process. If you want to get your money growing, you have to be able to stomach that volatility as well. And that's what's going to allow you to come out on top.
Yeah, exactly. And I think this volatility really scares some people, and it makes you think, should I just sit out of investing during these elections? But sitting out during times of elections out of fear or what have you is rarely a winning strategy. And you don't want to be scared of the market. You just don't want to deal with it alone. So investing is emotional, and you should definitely be talking to a financial advisor to help you get through this.
Yeah, definitely. I mean, if you're investing, you want to have someone on your team, not just on the investment side, but for the entirety of your financial life. And so, if you do have any questions, or if you're even curious about just getting help and reviewing your position, your portfolio, reach out to me. Yeah, you can find me on LinkedIn, Ziad Hijazi. Email me, ziad@gerberkawasaki.com. You can call into our office line. It's 310-441-9393.
Absolutely. Well, I hope that this helped you feel a little bit more confident in investing during times of elections. Make sure that you go out, make your voice heard, vote.
Yes.
I voted by mail sticker right here on my phone. So I hope that you do that.
Yeah, get out there and vote. Get your voice heard. Without a doubt, it's the best way to make sure that you're having an impact on the future of yourself and future generations.
Absolutely. And we will see you next week. And
See you
follow
next
us
week.
on all of our social media.
All right. Have a good week.
Have a good week.